In this video, I'd like to talk briefly about the meanings of the words you'll find on the asset side of a balance sheet. So let's look at one right now. Okay, a balance sheet. Okay, so a balance sheet on the asset side. So assets. We have various assets owned and controlled by the company. Okay, so an important distinction we have is between current assets and non-current assets. Current assets and non-current assets. What is a current asset? A current asset is something satisfying one of three conditions. Either it is already cash and cash equivalents, or it is expected to become part of cash and cash equivalents within less than 1 year, or it will be consumed, used within 1 year. Anything that does not satisfy this is a non-current asset. Okay, in our non-current assets here then, we have cash and cash equivalents. Cash and cash equivalents. So this is really made up of cash and bank accounts are the main things that you would expect to see in there. And usually the only things in there are cash and bank accounts. Okay, the next category, accounts receivable. So accounts receivable is where a business has provided goods or services on credit and has not yet received payment. Okay, so accounts receivable. Accounts receivable. The next one down, inventories. Inventories. Now, there's two possibilities for the content of inventories, depending on the business. If it's a business which buys and sells completed goods, there's only one thing normally in inventories. It's just goods for sale. Okay, completed goods for sale. If, on the other hand, we're dealing with a manufacturing business which makes goods, then very often we would have three types of things in inventories. The first type would be completed goods ready for sale. The second type would be work in progress, WIP, work in progress. These are goods which are partly completed at the time of the inventory measurement. Okay, and the third part of a manufacturer's inventories might be materials. So these could be things like raw materials or parts which will be used to make products. Okay, inventories. Prepayments is the next line. Prepayments are amounts which have been paid in advance. Two very common examples of prepayments are prepaid rent and prepaid insurance. Okay, so they're prepaid because they've been paid in advance and the economic benefit from these payments has not yet been received. Okay, so very often in a balance sheet, there's one more category. We could call it other current assets, and that covers assets that are not in the 4 above. And of course, there could be many other current assets in a balance sheet. Okay, so normally under that, after that, we would have a subtotal called total current assets. We would then move on to non-current assets. Non-current assets. And remember the definition of a non-current asset. It is anything which does not satisfy the definition of a current asset. So we have looked at 2 kinds mainly in classes, and here they are. The first one, property, plant and equipment. Property, plant and equipment. And in this sense, property means real estate. Property means real estate, which means land and buildings. Land and buildings. Okay, so property means real estate, which means land and buildings. The next one there, plant. Well, plant items are in a sense similar to equipment items. They're maybe a bit less mobile or a bit bigger, okay? But it's depending on the business, the difference between plant and equipment, well, it's not always the same, okay? But these are all tangible fixed assets. It means you can touch them, okay? Tangible assets. Now, the next category we move on to, we've called here intangible assets. Intangible fixed assets. In other words, you can't touch them. The important thing about this is that they give rights. Okay, they give rights to usually some item of intellectual property. And examples of this are patents, copyrights, trademarks, franchises, and computer software is another good example of this, software, okay? And again, we would have a subtotal normally here for total non-current assets, and then we would have a total that we would call total assets. Okay, so that's the asset side of the balance sheet.